Today, we're going to be talking about Dutch Bros, ticker BROS. Dutch Bros is one of the fastest growing drive-through coffee/beverage companies that reminds me of Starbucks in its early days. Dutch Bros IPO'd last month, opening at $32.50, and as of Friday's close is nearly 42% higher at $46.06. And full disclosure, I do have a position in Dutch Bros. In this video, I'm first going to give a high-level overview of Dutch Bros. Second, I'm going to go over my bull case for the stock. Third, I'm going to go over my bear case. And finally, I'm going to go over my game plan for investing in Bros. All this right after I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing for growth. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. And be sure to check out my Patreon if you want to get more insights into my growth-oriented portfolios, or if you just want to support the channel. And also, be sure to check out my free Discord to talk about growth stocks, SPACs, and other stocks with other members of the Wolves of Investing community. So without further ado, let's get right into it. What is Dutch Bros? Dutch Bros is a fast-growing company known for its drive-through shops that serve up high-quality, handcrafted, espresso-based drinks, very similar to Starbucks or Peet's. To a passerby, their drive-through experience may seem very similar to an In-N-Out burger, often with long lines wrapped around the parking lot. In fact, here's a photo of a Dutch Bros that I stopped by the other day. And as you can see, there's a steady stream of cars. Dutch Bros has an interesting, unique brand. Instead of baristas, they have broistas, who are often high energy, positive individuals known to strike up a conversation with customers. Runners greet customers before they get to the drive-through window, use tablets to take orders, allowing broistas to sequence the crafting of beverages and manage car throughput in the drive-through lane, ensuring that quality, speed, and service remain consistent throughout the day. Dutch Bros was founded in 1992 by brothers Dane and Travis Boersma in Grants Pass, Oregon. Hence the name Dutch Bros. Sadly, Dane was lost to ALS in 2009. The company dedicates one day in May called Drink One for Dane to raise money and help find a cure for ALS. They also have two other annual company-wide programs to give back to the communities, called Dutch Love and Buck for Kids. Dutch Bros describes itself as a fun-loving, mind-blowing company, making a massive difference one cup at a time. Prior to going public, Dutch Bros was run as Dutch Mafia LLC, and the company is still affectionately referred to as the Dutch Mafia by its loyal fan base. While espresso-based drinks are at their core, Dutch Bros also offers a wide variety of other beverages, most notably the proprietary Blue Rebel energy drink, and a variety of drink recipes that use Blue Rebel as a base. Blue Rebel accounted for approximately 24% of sales in 2020. And I think that Blue Rebel is one of Dutch Bros' competitive strengths, as it diversifies its reliance away from coffee. As of June 30th, Dutch Bros had over 470 shops in 11 states. 270 were company operated and 264 were operated by franchise partners. They believe that there is long-term potential for at least 4,000 Dutch Bros locations in the United States. In 2008, Dutch Bros stopped selling franchises to anyone outside the existing Dutch Bros system. And in 2017, they decided to stop franchising altogether and move to a company-operated strategy, with all operators recruited from within their system. Existing franchise partners continue to open shops, but the majority of growth is expected to come from company-operated shops. All shops are operated by veteran broistas, which reinforces the Dutch Bros culture and experience. And that's one quality I really admire about Dutch Bros, since shop operators have to start from the bottom and work their way up to become a leader. Another quality I really admire about Dutch Bros is the efficiency of their shops. Their efficient shop prototype is approximately 865 to 950 square feet, and they target at least 25,000 square foot lots to accommodate their robust drive-through operations. Depending on their lease arrangement, ground lease versus built to suit, their year 2 cash-on-cash return is between 35 and 75%. As of December 31st, 2020, 99% of their mature company-operated shops generated positive shop-level contribution, and 91% of shops open more than 15 months generated shop-level contribution margin above 20%. System-wide shops grew from 328 in 7 states at the end of 2018 to 441 in 9 states at the end of 2020. This represents a 16% compound annual growth rate, or CAGR. Company-operated shops grew from 37 at the beginning of 2018 to 182 as of December 31st, 2020. Revenue grew from $186 million in 2018 to $327.4 million in 2020, representing a CAGR of 33%. Adjusted EBITDA grew from $39.6 million in 2018 to $69.8 million in 2020. That was my high-level overview of Dutch Bros. For more information about Dutch Bros, I encourage you to check out the company prospectus, and I'll leave a link to it in the video description. So what is my bull case for the stock? In my opinion, Dutch Bros can grow revenues at a CAGR of 35% over the next 5 years. Dutch Bros' total revenues for the 6 months ended June 30th were approximately $228 million. By doubling that, I estimate that full year revenues will be around $456 million. So in 2026, I'm estimating $2 billion in annual revenues. By doubling that, I estimate that full year revenues in 2021 will be around $456 million. So in 2026, I'm estimating $2 billion in annual revenues. I'm going to use Wingstop as a comparable. Wingstop is another high-growth company in the restaurant industry with a similar market cap. Wingstop's current price-to-sales ratio is 18.5. To give myself a margin of safety, I'm going to apply a price-to-sales of 15 to Dutch Bros. That gives me a market cap of around $30 billion. Dutch Bros currently has 49.9 million shares outstanding, but I expect that there will be some share dilution over the next 5 years. So here I'm going to model the stock price given these 3 scenarios of 100 million shares outstanding, 150 million shares outstanding, and 200 million shares outstanding. With 100 million shares outstanding, my 5-year price target is $300. With 150 million shares outstanding, my price target is $200. And with 200 million shares outstanding, my price target is $150. Dutch Bros' closing stock price on Friday was $46.06. So in my bull case, using my minimum price target of $150, that would be a return of around 226%. So what is my bear case? In my bear case, there are several things that could go wrong. But I think that the main thing is the execution risk of scaling. Revenue growth could be a lot less than my 35% CAGR projection. There's also the risk of losing their strong company culture if they try to grow too fast. One of their competitive strengths is their brand loyalty. So in my opinion, they definitely want to stay true to their brand. The acceptance of their brand in other states may not be as successful as their first 11 states. There are also supply chain risks of scaling. In my bear case, I'm projecting a 20% revenue CAGR and an 8x price to sales ratio. In my share dilution scenario of 200 million shares outstanding, that would leave a share price of approximately $45 for a 5-year return of 0. So what is my game plan over the next 12 months? I am a huge fan of Dutch Bros and have been a customer for several years. I'm also very impressed with their co-founder and chairman, Travis Boersma, who was on an episode of Undercover Boss. I'm also a Starbucks customer and used to work at Starbucks as a barista in another life. So I feel like I understand the coffee retail business very well. In my opinion, Dutch Bros has a good chance of achieving my bull case scenario versus my bear case, and currently is one of my highest conviction long-term growth stocks. As I mentioned earlier, I do have a starter position in Dutch Bros. In the current market environment, there are a lot of crazy things happening with meme stocks, low float stocks, short squeezes, gamma squeezes, you name it. And I wouldn't be surprised to see Dutch Bros stock do something crazy like go over $100 in the next 12 months. It's not something I'm expecting, but it is something I want to prepare for. So with that in mind, if Dutch Bros were to go nuts and go over $100 in the next 12 months, I would most likely take some profits off the table to lower my cost basis. From around $60 to $100, I would most likely plan to just hold. Below $60, I would mostly just dollar cost average, but I would accelerate my investments if the stock went below $40 and $30. If it happened to go below $20, I would be loading the boat. And because this is one of my highest conviction stocks, I would be willing to invest up to around 10% of my portfolio into it. All right, so let me know what you think about Dutch Bros. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.